Netflix has been quite a controversial stock recently, and a lot of the reasons of why the stock has been selling off has somewhat been justified. I mean, with a PE of over 100 and with massive competitors finally entering this space with full steam ahead, this may be a stock that actually has a long way to go before it actually bottoms out. But I don't believe that it's all doom and gloom here for this company, and in this video I want to point out three main reasons as to why I would still consider an investment in Netflix and why I think Netflix will actually still be fine as a company and a stock in the years to come. So now guys, if you're brand new here, consider hitting that subscribe button down below and that bell notification beside it so you get notified on any new video that I release. Also, if you enjoy these kind of individual stock analysis videos, drop a huge like. I appreciate that. Let's try to get 300 likes on this video. So my first point that I want to cover is around their business model. It's sticky. The recurring monthly business model, in my opinion, is huge, and in my opinion as well, it's extremely sticky. What I mean by this is that once someone signs up for Netflix on their monthly plan, they will most likely continue to stay subscribed and continue paying that bill for a very, very long time. And really, to make this point, I want to actually look at the market that Netflix kind of went in there and disrupted, which is of course the cable TV and satellite market. As a millennial watching this video, you're probably wondering who still pays for cable TV. Well, if you look at this data here, you can see that around 44% of American households still subscribe to a cable TV service, which I personally found absolutely incredible. Even with Netflix, which is most likely a fraction of the cost of cable, people continue paying. And the ironic thing is that a lot of them have a Netflix subscription as well. Now, there's many reasons why one may want to keep their cable subscription service, and a big one is for sports. Live sports is a huge, huge thing here in North America, and a lot of people will pay a premium to get access to that. But the point I want to drill home here is that it is a very sticky business, and you can see that there's still tons of households that still have cable TV, even after many years of Netflix dominating this space. You would logically think by now that most people would not be subscribing for cable TV, especially when you have like ESPN Plus and that kind of stuff out there which you can get your sports fill from. But no, people are generally lazy, and once they sign up for a service, they will continue paying that service, and it's very, very difficult to get them to switch over. Netflix also has an advantage here because they're kind of the first ones into this space, and it's kind of what people associate video streaming with. If you think of watching a TV show, the first thing that comes to mind is Netflix. Kind of load up Netflix, see what's on there, see what movies are on, TV shows, whatever. And that, I think, is a massive advantage that this company has. Now, earlier this year, the company did struggle, and I believe they reported some loss in subscribers, but things recently have been looking up again, and the upcoming earnings report in October will kind of give us a better idea here, but it seems like things are back on track. Now, I personally believe that growth will actually continue coming in for Netflix. Maybe not so much in the US because we are reaching a point of saturation here for this market. But worldwide, Netflix has so much more potential to grow. Just keep in mind that these guys are pretty much first to market here when it comes to this, and they have a platform that just works and people enjoy using. So that's a major factor of why people would consider signing up for Netflix or even consider staying with Netflix even when the competition arrives. My second point that I want to discuss is that there's room for multiple players in this space. Many people believe that it's going to be one company that wins the streaming wars out, and in my opinion, I think that is false. I personally think that there will actually be multiple companies that end up winning this game, similar to many other services out there where you have a few different options to go choose from, and it's not just one company that dominates that space. And I think that if we look at other services that have actually picked up steam recently, this is pretty evident. For example, if we look at music streaming, we have two big competitors in the space right now, Spotify and Apple Music. These are actually two of the biggest music streaming services in North America, at least, and many people thought once Apple released their Apple Music that Spotify would essentially become obsolete and they would probably go bankrupt because not many people would want to use that anymore. Apple has a bigger brand name behind it, Apple has a bigger user base behind it from all their products, and people thought that they would actually be able to convert users from Spotify to Apple Music, especially if you're an iPhone user. And although Apple Music has seen a lot of success, things didn't really go the way that a lot of people were expecting. I personally have a Spotify subscription currently, and I have an iPhone, and I have no plans to switch over to Apple Music, and that's because of familiarity. I enjoy using Spotify, it works for me, and this actually brings me back to my first point again, which is that this is a very sticky business. Once you go and sign up for one of these services, you kind of just want to stay with that service once you're used to it. I don't believe that either company will actually back down anytime soon. I think competition will just continue getting fiercer and fiercer when it comes to music streaming, just like it will with video streaming. But I don't think that Spotify is going away anytime soon, and I personally will continue to use Spotify because I believe it's a pretty great platform, and I see no reason really to switch over to Apple Music. There's also a lot of other smaller players like TuneIn and Pandora that are in this space, so that just kind of reiterates my point even more that there isn't going to be just one company that dominates everything. There's going to be a lot of other smaller companies that capture a bit of the market as well. And really bringing this back to Netflix, I think this is exactly what's going to happen here as well. Netflix may end up being the Spotify of the video streaming space, where Apple TV Plus or Disney Plus may actually overtake Netflix over the coming years, but that doesn't mean that Netflix will become irrelevant, and that does not mean that Netflix is going to go bankrupt either. Even today, before these other two competitors have entered the space, there's so many different options to pick from. You of course have Netflix, Amazon Prime Video, YouTube Premium, you have like HBO Go. You have a lot of these individual services that people actually sign up for, and none of them seem to be backing down from the competition here. And what I find interesting is that even though these competitors are out there with their own original content and kind of exclusive content, Netflix still continues to grow despite all of this. I have no doubt that Apple TV Plus and Disney Plus will actually steal subscribers away from Netflix, but I don't think that's going to be that drastic of an amount, and I actually do think that people will end up subscribing from multiple services. And again, looking at my own personal habits, it'll actually take a lot for me to go out and cancel my Netflix subscription, just because I find a lot of value in the service. And even if Apple TV Plus or Disney Plus comes out with content that I really want to watch, it does not mean that I'm going to go and cancel my Netflix and pick the other one. I will most likely end up subscribing to both or even all three. Netflix is familiar, it's still relatively affordable, and it just works. Now, my third point is the content offered on these platforms, specifically on Netflix. And I believe that Netflix actually offers some great original content and exclusive content. Content is going to be the name of the game, and it's going to be the major selling point for all of these services moving forward. And this makes sense because, people are signing up for these services to consume content. So that's going to be the bottom line here as to what services succeed and what services fail. Now, I personally believe that Netflix has built up a solid library of content here, from their original content to exclusive rights that they have signed for other content. They have done an overall good job of building up a strong library. And even today, there are some great shows that are not on Netflix. If you think about Game of Thrones, one of the most popular shows of all time, that's an HBO exclusive show. It's not on Netflix, but people still continue subscribing to Netflix, and a lot of people even subscribe to HBO Go just to watch Game of Thrones. Did anyone think, oh, people are going to cancel a Netflix subscription so they can get HBO Go? I don't think so. That didn't really cross a lot of people's mind. In fact, what they did think was, okay, I have Netflix, it's just kind of there. Maybe I'll go and purchase this as well for the time being so I can watch Game of Thrones. Or maybe they'll find some other ways, some loopholes of getting access to the show and watching those episodes. Either way, my point is the consideration of canceling Netflix didn't really cross most people's minds. Now, I think that for the first few years, as Disney Plus and Apple TV Plus builds up their content, it's going to be a very similar story here with Netflix. People are going to continue using Netflix. They're going to try out these other services simultaneously, and maybe over time, as the other ones build up their content library and the exclusive content, exclusive rights, all that kind of stuff, then at that point, people may consider picking one over the other. I have no doubt that each one of these competing platforms will have exclusive shows that people are going to be interested in watching, but it may be a similar story as to what Game of Thrones was with HBO. People may just subscribe to that just to watch that show, watch it for a month, and then cancel it after that. I don't really have a crystal ball, so I can't really see how that's going to play out, unfortunately, but that's the way I think it's going to move, at least for the next couple of years. Netflix has actually done an excellent job of building up some great exclusive content. 13 Reasons Why, Stranger Things, House of Cards, maybe even Patriot Act. These are all shows that are exclusive to Netflix that they have produced, and these shows actually have a huge following behind it that people continue staying subscribed to the service to watch. The company is also spending massively here on licensing and original content, spending $12 billion in 2018 and expected to spend $15 billion in 2019. and probably even more than that in 2020 as competition heats up. I don't believe that 2020 will be the year where Netflix actually struggles. If anything, I think it'll take maybe 3 to 5 years for the competition to actually have a library, content library, that can compete with Netflix on a head-to-head basis. But until then, I would not be concerned about this investment. I think what's going to happen when these other services are released is that people are going to have Netflix and Disney Plus, or Netflix and Apple TV Plus, or maybe have all three. But I think that Netflix will still be included in one of their options regardless. And now, since this is a stock analysis video after all, we do have to spend some time looking at the charts here for Netflix and talking about the fundamentals briefly as well. The company currently has a PE of 100 with a forward PE of just around 50, which is extremely high in my opinion. The market cap currently sits at over $100 billion, but over the last year, this company has lost a lot of value because of fears of competition entering the space. Looking at their charts here, you can see that back in December 2018, the stock corrected near 45%, but then we rebounded and now we're approaching this level again. What you see on the screen is a weekly chart, and I believe the stock is most likely headed for that 200 moving average on the weekly. More likely than not, I think we hover around the 225 mark for now until we see either the upcoming earnings report, which is scheduled for October 16th, to see if we have any strong growth there. And if that does happen, we may see a rebound back to $300 per share. But if we see weak numbers or in-line numbers, I think we may actually stay in the 225 range until November, which is when both Disney Plus and Apple TV Plus will be launching. Then at that point, I think it'll be kind of a waiting game to see how many subs these services bring in. And more importantly, if people are actually going out there and canceling the Netflix subscription in favor of one of these other two options. Now, I did cover Netflix in my 3 stocks to watch for October 2019 video. If you haven't checked out that video, make sure you do, because there are some good picks in that video. But either way, I wanted to kind of make a dedicated video on Netflix as well, because I do believe this is a stock that's going to pick up a lot of popularity in the next couple of months. So it'll be interesting to see how this closes off 2019. Guys, thank you so much for watching. Again, don't forget to hit that like. Let's get 250 likes on this video. And again, if you're brand new here, consider hitting that subscribe button to join the community. Thank you so much for watching, and don't forget to invest positively.